Welcome to a deep dive into one of the most notorious financial scandals in history, the Enron Scandal. In this gripping exploration, we'll uncover the intricate web of deceit that surrounded Enron and delve into how Warren Buffett's investment wisdom spared him from the fallout of this monumental fraud. Let's rewind to the late 1990s, a time when Enron stood as a shining beacon of corporate success. With its innovative business model and charismatic leadership, Enron captivated investors and analysts alike. Yet beneath the surface, cracks were beginning to form. Enron's aggressive accounting practices and reliance on off-balance sheet entities masked a burgeoning financial crisis that would soon rock the financial world to its core. As the new millennium dawned, Enron's facade began to crumble. Revelations of accounting irregularities, hidden debt, and inflated earnings sent shockwaves through the markets. Investors who once viewed Enron as a surefire bet now found themselves facing unprecedented losses. The once mighty energy giant was teetering on the brink of collapse, and the fallout would be felt far and wide. Amidst the chaos, one man stood apart from the fray: Warren Buffett, the Oracle of Omaha. With his keen eye for value and unwavering commitment to integrity, Buffett steered clear of Enron's siren song. While others were blinded by greed and speculation, Buffett remained steadfast in his refusal to invest in businesses he couldn't understand. His timeless principles of value investing and prudent risk management would prove to be his saving grace in the tumultuous years ahead. Peeling back the layers of Enron's fraud reveals a tangled web of deception and deceit. Mark-to-market accounting, off-balance sheet entities, and complex financial structures were used to inflate earnings and conceal mounting losses. As Enron's house of cards came crashing down, the true extent of its malfeasance became painfully clear. As we reflect on the Enron scandal, we are reminded of the enduring lessons it has to offer. Transparency, integrity, and accountability are essential pillars of a healthy financial system. The Enron scandal serves as a stark reminder of the dangers of unchecked corporate greed and the importance of robust regulatory oversight. As we bring our journey through the Enron scandal to a close, let us remember the lessons learned from this dark chapter in corporate history. Warren Buffett's steadfast commitment to integrity and value investing serves as a beacon of hope in an otherwise tumultuous landscape. By heeding his wisdom and remaining vigilant against the pitfalls of greed and deception, we can navigate the treacherous waters of the financial world with confidence and clarity.